It's been almost 800 days since the 2020 Bitcoin halving, and we are even closer to the 2024 Bitcoin halving. And that piece of information could not be any more important as we try to identify the bottom of this Bitcoin bear market. What is up, everyone? Welcome to Crypto Capital Venture. Hit that subscribe and like on the way, and let's just jump into this Bitcoin video. This is what we're looking at. This range right here is so compelling. It's the most, in my view, the most compelling piece of data that we have on Bitcoin, the bottom formation of Bitcoin, and there is a ton of data out there on chain metrics, and it's relevant. That stuff is important, but in my view, what I'm about to talk about is the most compelling data. It is what we see here in this range between these two indicators, 200-week moving average and this 786 macro Fibonacci retracement that I'm going to talk about. For context, in the opening of this video, we talked about the Bitcoin halving, right? And this is these white lines that you see on the screen are these Bitcoin halving. So if we're looking at the 2020 halving to Bitcoin right now, almost 800 days, as I mentioned in the video opening, and then 2024 halving all the way over here. Now, this is the story of Bitcoin. I charted this chart back in 2018. Now, when I charted this chart back here, none of this data was here. This hadn't happened yet, but it was based off of three very simple things, a pattern of three events. Number one, halving, the amount of brand new mined Bitcoin cut in half for miners, right? The deflationary aspect of Bitcoin that lends itself to the long-term value growth of Bitcoin. Number two, all-time high. 1 year after the halving, you see Bitcoin reaching all-time high. It's very simple. Number three, after all-time high is reached, you see a consolidation and sell-off in Bitcoin price, i.e. a bear market. So three-step pattern. And when I charted that chart based on those three things in 2018, and I explained those things back here, we were speculating. I'm not patting myself on the back right now, everybody. I was just taking historical information and speculating, hey, what if it happens again? Well, it did happen again. Here's the 2020 halving that happened into all-time high in the year after, and then the correction, the bear market that we're in right now, the three-step pattern. And so it's happening again. And so when I charted this, and I really want to dig in now to the bottom formation of this consistent flow of Bitcoin, when I charted this, I speculatively was taking the bear market low in 2018 to a speculative all-time high of $90,000 in 2021. I placed a Fibonacci, and it brought me to like a 786 retracement of around $21,000, $22,000 that you see here. That didn't happen. Bitcoin did not hit $90,000. It hit around $70,000. So you can see if we adjust the Fibonacci, the retracement is lower, right? Here's the 786 line down here around $17,000 to $18,000. And this is where Bitcoin is right now. This is a Brave New Coin Liquid Index. The price is not exactly updated, so I'm going to go over here to an updated chart. And here we are. Here's Bitcoin. Here's the 786 line you see in yellow. There's the retracement. Bitcoin wicking on the weekly just above it. So it is all played out. What I was speculating in 2018 has played out. Having all-time high 786 retracement. Now, here's where we are. In these previous cycles, Bitcoin has bottomed below the 786 line. We need to take note of that. Bitcoin bottomed below the 786 line in 2018. You can see it there. And Bitcoin bottomed in this bottoming range in 2015 below the 786 line. It also, to take note, bottomed at the 200-week moving average, 2018, that red line, and then back here in 2015. Now notice when it initially capitulated, there was no moving average data there, but probably in that general vicinity or so, there it is, Bitcoin bottoming below the 786 line at the 200-week moving average. This is where things get crazy. This is where things get compelling. And I want to take a quick pause to say, I know and I understand Bitcoin has never operated in an environment like it is now. Inflation, recession concerns. People say we're in a recession, depending on who you are. Interest rates rising. So much fear that we've really not seen on the macro timeline as Bitcoin has been trading. right? Bitcoin wasn't around in the housing panic market in 2008. It wasn't around then, but it's around now, and we have to keep that in mind to see how Bitcoin trades and operates. And we're not ignoring it. But this data that we have on Bitcoin charts, and also with the potential that there could be a rally in traditional markets. Imagine if equity markets just rally for the rest of the year. What's Bitcoin going to do? What's crypto going to do? We have to keep that in mind as well. So here we are, Bitcoin just potentially forming its bottom, and this is the compelling piece of data. It's a question I'm asking myself. You see Bitcoin very simply put, bottom between these indicators, the 786 and the 200-week moving average. And here we are again. We're between the 200-week moving average and the 786. So the question is, number one, is it going to happen again? Are we in the bottom formation range? But the second thing to evaluate here is the kind of inverse thing going to happen that happened last time? Meaning, remember, Bitcoin fell below the 786 and bounced at the 200-week moving average. Is Bitcoin going to fall below the 200-week moving average and bottom at the 786? This is the most compelling thing that I'm watching on these charts right now. I'm so interested in it. And we're going to see. Time will tell. I'm not here to predict. I'm not a financial advisor. This isn't financial advice. This is data. I really enjoy tracking the data with y'all. And with tracking this potential bottoming formation here, I want to mention something that is consistent, because obviously there's a little bit of a divergence here. This 200-week moving average is a little different than previous cycle lows. But one thing that I do want to watch for is the consistency of Bitcoin bottoming below the 786, because this is something that has happened in previous cycles, bottoming below the 786. So this means that there's still room to the downside for Bitcoin to bottom below the 786, putting aside the 200-week moving average, putting aside all of that. Where that bottom would be, I'm not sure. In previous cycles, below the 786 line, we had the 200-week moving average. We don't have it now because it's above the 786, right? So we'll track that and we'll watch it. We'll be careful to see if Bitcoin does fall below the 786. But one thing I know is the consistency on these charts, the commonplace of what we're seeing right now is just insane to me right now. And if we're looking at these charts, I want to mention, just putting aside the indicators, we had this fall off from $30,000, boom, to that 786, around 17,000 to 18,000. Remember the $6,000 area back in 2018, this fall off to the bear market low? So similar. And you can even go back to 2015 and see a similar move, this fall off of capitulation in 2015. It's just crazy. And that was really 2014 into 2015. It's crazy to see the similarities. If you just step back and look at these charts, you just see it. Wow. And then you start putting on these data pieces, these data points, like the halvings, and seeing how it's all intertwining, right? Look at this. And so we're, in my view, in this bottom formation, we're in this similar kind of environment of fear, extreme fear right now. Yesterday, extreme fear. Last week, extreme fear. Last month, extreme fear. This is what bear markets are made of. We've been here before. The commonplace aspect of Bitcoin, it just could not be any more true. The long-term trajectory growth of Bitcoin could not be any more consistent. And so here we are, we're in this range right now, and this is what I'm tracking between the 200-week moving average and the 786. Does that hold as a bottom formation? We could take our bars pattern, which is very speculative, from this fall off at $6,000 to the 2018 bear market low to when Bitcoin escaped the bear market, and we can kind of just bring it over to this fall off from $30,000 and look at the similarities. Yes, it could extend more. It could be more aggressive, more volatile. We could go down more, right? Look at that, below the 786. But just the speculation here as Bitcoin forms its bottom, I think is helpful. It's a roadmap. And this is exactly why I started doing technical analysis. It's so I can visualize things. I like to visualize and anticipate things, not predict, because I just like to be prepared so that I'm at peace of mind from a mental perspective as I'm making decisions, not only on the charts, but in life. It's good to zoom out. It's good to visualize scenarios And so we can make wise decisions in the moment. So right now, Bitcoin approaching $21,000 as I do this video. The Bitcoin bottoming range is so compelling to watch right now between these two indicators, the 200-week moving average and the 786. Let me know your thoughts below. I appreciate you cruising by. I'll see you in the next video. God bless.